Focusing on the rupee and the fresh record low we've seen today, slipping to 89.78 against the US dollar, breaking its previous low now of 89.49 recorded just 2 weeks ago. The sharp depreciation coming despite India posting a stronger than expected Q2 FY26 GDP growth of a whopping 8.2%. All eyes are now, of course, as Sneha also mentioned, on the RBI's policy stance on Friday. And the markets are hoping that there will be some clarity there. To decode what's driving the fall and its impact across sectors, let's go across to Subramanian Sharma, founder and director at Greenback Advisory Services. Mr. Subramanian, thanks for joining us. Give us a sense of really what's happening on the rupee and why this sharp fall. We saw it 2 weeks ago and again today a bit of a nosedive coming in.
See, the rupee has been under pressure after the US stance on India on the tariff front. So basically, the tariff has been the biggest spoiler of the growth on the rupee movement, and rupee has seen continuous depreciation in spite of the dollar weakening against other currencies. So rupee has got isolated only because of the fact of this tariff, and to that extent exports have got affected. So there has been a physical impact of the fall in export and a psychological impact of that negativity which has been taken by the importers, and they have been buying on all dips. And the most important factor is an FII who has not been active this year. There have been more outflows than inflows. And that has also been one of the reasons for the rupee's depreciation. So we are seeing the rupee hitting new highs and it breaking certain levels, and the break of those levels is prompting a bigger move. So I won't call it a panic, but it is more action by importers to protect their bottom line, because they expect that the tariff factor is not going to change very soon unless India signs the trade agreement with US, and the tariff factor is reduced from that additional tariff of 25% and all. So I think the rupee may remain under pressure. RBI is doing the job of intervening, because when they saw the rupee break that 89, they intervened and it came below 89, settled around 88, 80 levels. But once again, it moved above 89, and today it broke 89.50, and there was a sharp move. So each move is a little sharper because there's an inbuilt demand with no corresponding inflows. Exporters are also little conservative. They are holding on to their inflows, waiting for higher levels, because there have been talks of rupee testing 90 very soon and all. So I think, yes, the pressure is there, but this pressure is on the back of the positives, which are more, we are seeing a higher growth. We saw the GDP growing at a high level of 8.2% and all. So rupee on a standalone basis is purely driven by this negative news of the tariff, which when corrected can see a big correction on the rupee also.
If you like the video, do like, comment, share and subscribe.